All right, good morning. Today is November 13th, 2024, and I am back with another edition of the Wednesday Live Show. Last week I didn't do a show because it was the day after Election Day. And when I woke up in the morning, I found out who is the new president-elect. And so, I mean, there was so much to unpack and digest that I decided to just skip the show so I could catch up on what in the world was going on. So that was kind of interesting. So anyway, apologize I skipped last week, but I'm sure that everyone else had more to check out and read than listen to me ramble about a lot of stuff I didn't already know about. Anyway, um, so I haven't done a show for 2 weeks. Let's see, this morning the inflation numbers came out. The CPI came, headline CPI I believe was 2.6, the core was 3.3, and interestingly enough, it was slightly up a little bit, and everyone knows that inflation is still a big problem. And of course, I've been complaining about inflation for years, talking about how it compounds. So anyways, I got a couple charts here. I got a couple charts here this morning that I've saved from my various places looking around on the internet. This is an interesting one because this explains it in a nutshell, and I think a lot of people are catching on. I mean, over the years, this is what most people didn't understand because, of course, the mainstream media loves to say that inflation's coming down, right? And so it actually, this is old. This is not including today where it ticked up slightly here, so 2.6%. But this is the line to pay attention to. This is the compounding effect of inflation. And see, that's why this is a great chart too. It's labeled Main Street inflation because inflation compounds, right? So take this chart or take this line right here, this light blue line, and add another 2.6 to it. And so, if you take a long-term chart of inflation and zoom out, I mean, it only goes up. It's insane. And so it just compounds, right? So here's the thing, I always say that, and I'm sure I've mentioned it here plenty of times, is that if the inflation rate was 0%, then everything's still going to be 20% more expensive than it was 4 years ago, right? And so that's the way it works. And so, and of course, the Fed is targeting 2% inflation, and the way that it's calculated has been changed quite a few times over the years. I'm sure you remember that. And so it's a problem. It's one of the biggest problems in America. As a matter of fact, it was, I think, the economy was the number one thing issued during the election. And so it's going to be interesting to see what happens because, as we know, the Fed has kind of painted themselves into a corner. Now, the market reaction since the election is astounding. We'll look at that in a minute, but first, let's finish talking about inflation. So, real quick, inflation compounds, prices go up, prices go up. Prices have been rising my entire life and yours too, and that's just how it's designed. Um, Even though the rate of inflation, it's funny. I've said before that the word inflation should always be preceded by the term the rate of inflation because that's what it actually is. Inflation can drop and come down. That doesn't mean prices are coming down. So this is an interesting chart that I found somewhere, and this is this is incredible. I mean, well, look at this. 2020. Since 2020, food costs have increased 35%, and this is another big deal because every time I go to the grocery store, I mean, and the funny thing is, on some items, this is probably underestimating it, right? Because I've seen lots of prices go up a lot, and then there's certain things that are still relatively inexpensive, but I mean, for the past 4 years, I've been getting sticker shock at the grocery store, and so this is all kind of started around the pandemic. So, anyways, that's but I mean, look at that line there. That's incredible. 35% since 2020. And this next one I found this morning. This is from Peter Bhakvar, I believe, who's everybody probably knows who he is. But this is what's funny. So the headline CPI came out at 2.6%, right? But these little circled things here are different little categories. Like eating out at restaurants was up 3.8% year over year. Service inflation up 4.8%. Rents 5.2%. Primary residence, blah blah blah. What's this one? Spikes medical care prices. Excuse me, 3.3%. That even seems low, to be honest with you. Healthcare insurance prices 6.8% year over year. Vehicle insurance prices 14%. Shoo-wee. Cost of fixing one's car 6%. And this is airlines right there. So anyway, the point of this is these circled numbers are actually like real life stuff that, people use all the time and have to pay on a monthly basis, like insurance, right? And they're up significantly year over year. And so that's what I was talking about when I was mentioning how the CPI basically headline CPI, as we all know, basically understates the actual cost of living. So there you go. And it's always like that. When you dig into the official economic numbers, it's never as pretty. It's never as nice as it seems. Right? So, man, there's just so much stuff going on right now. Last chart I want to look at here before we get to the market is price to sales ratio of the S&P. And so we've been talking about the Buffett indicator, and almost every other day I read something about Warren Buffett's, big cash holdings, which is humongous. And so Uncle Warren thinks that the market's overvalued. Buffett indicators at an all-time high. Everything, well, not everything, but lots of stuff are just at all-time highs. Valuations are stretched, and it's going to be interesting to see what happens here. And so, I mean, in the near term, anything could happen. The S&P is over 6,000, right? Actually, it's like fluttering right around 6,000. The over and under now is 6,000. And so it's going to be interesting to see how much of this post-election gain can be built on, and or what's going to happen from here. I mean, things just got really super exciting. Although, we're headed right into the holidays, and so that's a whole nother thing. But man, it's wild out there. It's hard to even keep up with the news these days, to be honest with you. But this is something to pay attention to. So, I mean, just because, the old saying, the market can stay irrational longer than you can stay solvent. And so there's a lot of warning signs out there, a lot of red flags, but that doesn't mean that it can't continue to go up and get even more ridiculous, especially now that the momentum is in everybody's favor. And let me close this. And so, there's a reason they call it blue sky. Right? Blue sky is, let me go to the actual S&P here. I had the SPY up this morning. Yeah, I mean, we're in blue sky territory up here. And interestingly enough, look at this consolidation pattern that I drew a couple of weeks ago, right? I was talking about how the market was trading sideways prior to the election, and then it's just crazy. So we had this big sort of gap down and a big down day. This is the 50-day moving average. And so this was the little sort of fake out move prior to the election. And then there you go. So this was, this was a week ago. There's election day, there's the day after, and just absolutely incredible. Let me zoom out on this chart a little bit. So here's what I'm thinking. Let me extend this out a little bit. Yeah, I just want to extend this out and save this chart because to me, this is sort of like the major support area right now. The top of this box, the bottom of this. The funny thing is, we're getting, like, just the past few days here, we're getting a little bit of sort of what looks like, what looks like a pivot high and a dip that's forming, right? I mean, it really, really sort of looks like that, but you never know, right? Back here, there was this big run up, and then you had this day and this little 3-day pattern right over here that looks kind of similar to where we are now. And basically, all we got was a consolidation, and we took another leg up. But the more that I look at this chart, it sort of does look like it wants to come in a little bit, honestly. But hey, you never know what's going to happen. Already today, it opened, we had a little pullback, and it's starting to rally back up now, right? And so you get these, it seems like recently, well, at least the past few days, what's been happening, let's see, today's Wednesday, so yeah, so like this week, last week was the post-election euphoria for a few days there, and then this week it seems like every morning the market opens and it's like weak initially. The first move is down, and then the buyers step in. So that's kind of interesting. But I mean, this is clearly what you call a 2-2 pivot high, right? So you got 3 days in a row with lower lows and lower highs after 3 days in a row with higher lows and higher highs, and then there's that little pivot candle. So wouldn't be a huge surprise. Thing of it is, it's hard to be bearish when the overall trend up is this strong. And so what's going to be interesting is this gap here. I don't want to fool around with my charts and try and go all the way back to the 2016 election, but I will tell you that I remember this very well. The 2016 election was crazy, and there's still a gap like this that never got filled on the chart. So in 2016, Trump and Hillary Clinton, what happened is that Hillary was expected to sweep it. The opposite happened, and the S&P futures were limit down at night, like that night on election night, and then they recovered, and the next day you had a gap up, and that gap has never been closed. So imagine that. You talk about all gaps get closed. Well, I can tell you that there's still a gap from 2016 on the chart. So that's kind of crazy, but so it'll be interesting if we do get a little bit of a pullback. There's major support here. I mean, there's major support, all the way here and down here, the 50-day moving average, all that kind of stuff. So it's kind of looking pretty good. The best thing would probably be for a little bit of a pullback. I want to show you something really interesting. So first of all, you can see I've got all these sort of support levels. I like support and resistance. You guys remember? Let's see if I can get this on this chart when I pull up. Yeah, see, I was afraid of that. So here's just something kind of interesting I was looking at. If I pull up my chart of Microsoft, you could probably remember a while back, like I drew this downward sloping trend line and I drew this upward sloping trend line. And of course, I have this major support and resistance levels. And the older and wiser that I get, trend lines are less meaningful to me than support and resistance levels. And this is a great example of why. Because you had this big downward sloping trend line and it broke to the upside, right? Which theoretically would mean, hey, this is bullish, and you'd get a continuation. But then, this had to have been earnings right here because we're in earnings season. So, and then, we broke this lower trend line, which would lead one to believe that, okay, boy, we broke down out of this. So we broke up out of the triangle, we broke down out of the triangle, and right now we're just smacking, the price is smack in the middle of it, right? So anyway, when I looked at this, I thought to myself, this is a great sort of lesson about drawing, trend lines, upward sloping, downward sloping. Now, of course, trend lines are useful in a lot of ways, but I don't think trend lines hold as much weight as support and resistance level and ranges, right? And that's just kind of how I feel about things at this point. So, speaking of which, let's look at IWM, because IWM, well, I guess what I should do is pull up my actual IWM chart with the marks on it. Look at that. This is a daily chart. You can see up here. So, for the longest time, I was sort of cutting off the top part here of the stock charts thing just to make the chart look bigger and better doing the show. But at some point, I realized that when I was bouncing around through these charts, you couldn't really tell whether it was a daily or a weekly chart unless I said so, because nowhere else on here does it really sort of identify it. And so I decided to start doing the show so that you can see up here whether we're looking at a daily or weekly chart, because I have a mix of them in here in some of these lists of stocks that I follow. Anyway, this is pretty incredible. I mean, look at this big sort of cup and this range, and we've talked about this range a bunch of times, and so there you go. The small caps starting to break out, which is kind of interesting, and which leads me to look at ARK. So let's see, I got two ARK charts on here. I'm not sure why, but well, let's see what the difference is. Anyway, so this is a weekly chart, and I haven't updated this box, as you can see, in quite some time. But look at this breakout here. This must be the daily chart. Let's see what the difference is between these. Oh yeah. This is interesting. This one is more. This one is trend lines. All right. That's a pretty nice bottoming pattern. I'll be honest with you. Look at the duration of this bottoming pattern. Oh boy, some of these stock charts, they're great in some respects, but they're annoying in a lot of other respects. Anyway, this is an incredible. There's the daily chart. Look at that bottoming pattern and the breakout. And then, of course, there's the weekly chart, which is even more astounding. And so, it kind of makes sense, right? I mean, the market's hitting all-time highs, election's over, you got animal spirits. I mean, I'm not even going to talk about Bitcoin, but my God, Bitcoin's like hit 90,000. It's at $91,500. Absolutely incredible. Up another 2% today. I mean, that's a whole nother story. But anyway, it proves that animal spirits are alive and well. And boy, look at this. This is just incredible. So, the thing of it is it's hard to get real excited at this point about going all crazy with, jumping into the animal spirits. The CNN Fear and Greed Index is about to hit extreme greed. You got all this, a lot of stocks just absolutely. Well, let's look at the Qs here. Run a weekly chart. There you go. Qs basically hit an all-time high too. I guess I need to go to. see when I bounce around these charts here, some are candlesticks, some are not. So there we go. Wanted to get back to a candlestick chart. So yeah, I mean the QQQ, now back to the daily chart. QQQ, big sell-off over the summer, and then rallied back, and here we are, all-time highs in the history of the world. And so, and it's got the same sort of little, breakaway gap pattern to new all-time highs. Now it's coming in a little bit. With the Qs, I would say that, there's a big, actually, I didn't want a trend line. Oh, well, I'll make it a trend line. I'm getting away from drawing trend lines and more drawing zones because that's just, I just prefer zones. Let's do that. There we go. There we go. There's our sort of support zone there on the Qs. I shouldn't have to do all that. I shouldn't have to click, 2 or 3 times just to have a mark on the chart stay there. I would prefer that when I put a drawing on the chart, it's just there until I delete it. Anyway, that's a pretty powerful breakout. This is a really sort of a choppy. This was a choppy ride to all-time highs, unlike the S&P. So let's go back to SPX here. Here's something else that I'd like to tell the people at Stock Charts is I should have one chart for each symbol, and whatever I draw on it should appear on it no matter what. Right? So like to get back to my S&P chart with my markings on it, I got to select one of these, which is kind of annoying. But every now and then, I mean, it's nice to look at just a clean chart like this with nothing. There's nothing on here but a 50-day moving average. So I suppose there's some benefit to actually, having all these different charts with different marks, but it is kind of annoying, to be honest with you. Anyway, I could draw trend lines across the highs. I could draw trend lines across the lows. I could draw all sorts of trend lines. Let's pop over to a weekly. Interestingly enough, when I do this show, the weekly chart typically doesn't show us a whole lot because there's only 2 days of the current week in here. Notice how tight the range is here, too. That's kind of interesting. So, I mean, last week was, gargantuan long range move, the new highs, and now we're right at this 6,000 round number here. There's the big cup and handle, and I got to tell you, look at the end of year last year, right? I'll zoom in here a little bit. Trying to zoom in. Oh, there we go. November. Right, look at November last year into the end of the year. Every week from the end of October into the end of the year, every week higher. So that's something to keep in mind. And actually, I didn't show my seasonality chart this morning, but you guys remember that chart that I've been bringing for since the mid-October that shows the November seasonality is just basically straight up. And of course, this is the strongest time into the end of the year, so it's going to be incredibly interesting to see what happens between now and Inauguration Day, but between now and the end of the year. Ideally, you'd want to see the price retrace into this candle a little bit and not get too much more extended, because man, you talk about extended. This is a weekly chart too, by the way, as you can see up here. Here we go. This is my chart that's got some marks on it. Oh, there we go. This is what I was talking about, these trend lines here. You guys remember I had this trend line drawn across these lows and it got broken, and trend lines kind of point the direction, but of course we all know, just for an exercise here, you can remember when I had this trend line drawn like that and we broke the trend line. Well, that doesn't mean that the bull market's over. Obviously, we had a pretty decent dip there, and then, it went up. And so at that point, I took this trend line and I moved it down there. And that's what I see a lot of. And I've done that, been doing that for years. You draw a trend line, the steeper it is, the more likely it is to get violated. So I draw a trend line like that, it gets broken, and then, the market pulls back a little bit and then keeps rallying. And so now, this trend line is drawn like this, right? And so if it were to come down and break that trend line, that doesn't necessarily mean, run for the hills. These levels, I think, I think, like I said earlier, I think support and resistance are getting a little bit more useful. There's a lot of times that that the price obviously respects support and resistance. So here's a good example. This is a good one because it was resistance here, obviously, long time, big dip there, and then when it got back to that level, it was resistance, took another dip, and then finally when it broke through, it acted as support. Right? And I mean, literally, even up to, practically here, I could extend this over. Might as well while I'm here. So there you go. That's another major, that's an existing major support level right there. So notice on this particular chart, this is my main go-to chart now. I don't have any trend lines drawn on it. I just have support and resistance levels. And so pretty soon here at the end of the week, if depending on what this looks like. Obviously resistance is at the high from a couple of days ago. Notice down here, and this was kind of, we talked about this in mid-October, like right down here where the MACD crossed down. We talked about how the MACD was crossing down, and that sort of coincided with this area here. And it pulled back right to the 50-day, like textbook test of the 50-day moving average. And then, of course, certain things don't respect the laws of technical analysis, and one is, a presidential election, a 4-year presidential election. You can throw your textbook technical analysis out the window because that is it's a fundamental event. So anyway, we can see what happened. Everything's great except for, as usual, I'm skeptical and a little nervous about the future because the market's never been more overvalued in the history of the world from so many different metrics, and that's something to worry about. And then there's plenty of other stuff to worry about because the economy is more than likely not as hunky-dory as you would be led to believe because everybody has an ulterior motive for making people think that, everything's better than it is. And so, and a lot of it, I don't talk about politics. I don't want to talk about politics, and it's tough because politics does play a significant role into what goes on with the market. But anyway, suffice it to say that leading up to the election, it was beneficial to the incumbent administration to make things seem like they were great, and so come next year there may be hell to pay because under the surface I don't think that the economy is all as great as we have been led to believe. And so keep in mind, like the CPI number, looked great, 2.6%. That's, but then we looked under the surface and we all know that literally like the CPI has been masking like the real pain caused by inflation. So things are going to get really, really interesting from here. And I think once the initial sort of euphoria wears off, that we could be in for a pretty rough ride. However, longer term, the reason for this euphoria is that the participants believe that this is going to be good for business, right? The new administration is going to be good for business. So they got a lot of stuff to fix, obviously. So anyways, we're going to see how that all plays out. And I'm going to go ahead and call it a show right now. My 30 minutes are up. So thanks for tuning in. I will see you back here, same time next week, most likely. There's a chance I won't be doing a show next week because I've been called for jury duty, and it remains to be seen whether next Wednesday I'm going to have to be there or not. So we'll see. If I skip next week, then it'll be the day before Thanksgiving, and hopefully I'll do a show that day, but we'll have to see on that one too, because my potential jury duty runs for the next 2 weeks. So wish me luck. If I'm here, that's going to be good news. If I'm not here, then it means that I'm fulfilling my obligation as a citizen. So I will see you guys next chance that I can get.